Okay, in that subsidiary books, we completed the topics are purchase book, sales book, purchase returns book, sales return book, and we done the problem relating to the purchase book and sales book. Okay, next see what is the meaning of bills receivable book, what is the pro forma of that book, and next is what is the meaning of bills payable book and what is the pro forma. Okay, now see here, next is bills receivable book. So what is the meaning of this bills receivable book? Why this book is used in our books of accounts? So when transactions relating to bills are numerous, okay, so then that why it is common practice to maintain a separate book. Okay, that separate book is known as a bills receivable book. Okay, so under that bills, so first is bills. Okay, so these bills are of two types. Okay, one is bills receivable and second one is bills payable. So bills receivable book is will arise in settlement of accounts between creditors and debtors. Okay. A bill means what? What is the meaning of bill? A bill is an order given by a creditor to his debtor to pay a certain sum of money to or to the order of a specified person on a specified date. Okay. So this bill is one type of an order. So that will be given by a creditor to his debtor for what? To pay a certain sum of money to on a specified date to a specified person. So that bills drawn by the trader and it is duly accepted by his debtors are called as an a bills receivable. So that these types of transactions are entered in a separate book called as an a bills receivable book. So under this book is maintained to record all the bills received from the debtors or bills received by the traders. Okay. Now first write down this meaning of the bills receivable book. After that we'll discuss about the pro forma of that book. First write down a bill is a bill is an order is an order given by a creditor. A bill is an order given by a creditor to his debtor to pay a certain sum of money. Certain sum of money to or to the order of order of a specified person on a specified date. On a specified date. Okay, so that bills drawn by the trader and and duly accepted by his debtors are called as bills receivable book. Bills receivable. Okay, so these are entered in a separate book. These are entered in a separate book called bills receivable book. Okay, this is the meaning of the bills receivable book. Then who is debtor and who is creditor? So that a bill is an order given by a creditor to his debtor to pay a certain sum of money. Na? Then who is creditor? Who is debtor? Creditor means a creditor is a person to whom the business owes money. And debtor is who is debtor? So debtor is a person who owes money to the business. Okay. Creditor is person to whom the business owes money. Okay. So that the bill is given by a creditor to his debtor for what? To pay a certain sum of money. So that bill is drawn by the trader and that bill is accepted by his debtor is called as an bills receivable. So these are entered in a separate book is called as an bills receivable book. Now see the pro forma of this bills receivable book. Pro forma of bills receivable book. Okay, so these are columns of the bills receivable book. So on that first column, date, date, date of receipt of a bill, date of receipt of a bill, next, from whom received, from whom we received, next is term of bill, term of bill, due date of bill, due date of bill, amount, and any remarks will be there, that will be right under this last column. Okay, remarks. Now see here, see here, suppose and the date is January 1st. Okay, acceptance received from A, payable 3 months after date for rupees 6500. So on the date of receipt of bill, we write on the date, which date we received that bill, on January 1st. From whom we received, acceptance received from whom, A. So from whom received, we write A. Next is term of bill. Term of bill means what? Term means what? Period. So how many periods, how many months that bill is payable? Okay, here in this problem, in that problem is mentioned like 5 months of that bill, or 3 months of that bill, 2 months. Okay, in this example, acceptance received from A, 3 months after date. Here term of bill is 3 months. Due date of bill is when? So 1st January. Now 1st January to 3 months means what? Up to 1st January to 1st February, 1 month. 1st February to 1st March, 1 month. Okay, 1st March to 1st April, 3 months. Okay, 1st April. So when we maintain this bills receivable and bills payable, in your inter second year we studied that bills of exchange, in that any bill is accepted or payable, in that included 3 days of grace days. Okay, okay, so that grace of days is an 3 days, means any ways when the that public sorry, that banks have any holidays will be there now. So for that purpose we added that 3 days. Okay, so that is an 4th April due date, when with how much amount is 6500. Okay, like this we do the problem. Okay, next is bills payable book. So in mostly in examination, so this bills receivable book, bills payable book, general proper will not come in your examination. So we discuss it just for knowing purpose. Okay, next is bills payable book. Payable. Okay, so this book is maintained to record all the transactions relating to bills payable. Okay, that is a bill is drawn by the creditor, accepted by the trader in settlement of accounts. Bills payable book is this book is maintained this book is maintained to record all transactions to record all transactions relating to bills payable, that is bills drawn by the creditors, drawn by the creditors and accepted by the trader in settlement of accounts. Okay, next see the pro forma of this bills payable book. Pro forma of bills payable book. We make one extra column, that is a serial number, date of acceptance of bill, to whom given, term of the bill, due date of the bill, LF. Okay, so in that bills receivable book also, after due date of the bill, make one extra column, that is an LF number. Okay, so first one is serial number, that is 1 2 3 4, and next is date of acceptance of bill, date of acceptance of bill, to whom given, term of the bill, to whom given, term of the bill, due date of the bill, due date of the bill, LF number, amount, and any remarks. Okay. Okay. So this is a pro forma of a bills payable book. In that journal proper, next is journal proper. So any transaction is not recorded in above these books, the transaction will be entered in this book is an a journal proper. Okay, so this journal proper is used for recording only those transactions which cannot be recorded in any other subsidiary book. Okay, so in this journal proper we used to record such entries or such transactions as opening entries, rectifying entries, any transfer entries, adjustment entries, closing entries. Okay, so it is used for recording only those transactions only those transactions which cannot be those transactions which cannot be recorded in any other subsidiary book. Okay, it is used for recording only those transactions which cannot be recorded in any other subsidiary books. So in this general proper, we record as any opening entries, rectifying entries, any transfer entries, adjustment entries, and this closing entries. Okay, now we'll see do the problems regarding the subsidiary book. And in this subsidiary book one book is left, that is a cash book. So that cash book will be discussed after completing problems regarding this. Okay, so in that in the second unit cash book will come for long answers. Okay, definitely cash book will come for long answers. Okay, in this remaining seven types of books will be there. Now under that definitely four will come. What are that? Purchase book, purchase returns book, sales book, sales return book. In this one problem may will come or one theory question will come, but under this cash book definitely one problem will come. That problem may be one single column cash book or double column cash book or triple column cash book. Okay, now we'll see the problem in your textbook. Now see the problems. prepare the purchase book of Mrs. Fancy Dress Mart. June 2nd, purchased from Gupta of Guntur. Fancy Dress Mart now. So 100 t-shirt set, 80 rupees per shirt. Next on June 4th, sold to Burman of Bombay. So 50 t-shirts at 122 per shirt. Which book we are preparing now? Only purchase book. In that purchase book, what items we recorded? Only the what are the transactions relating to their purchased goods on credit that will be recorded in purchase book. So cash transaction will be recorded in cash book. So here how to know this is an a credit transaction? At the end name is given now. So then that transaction is an a credit transaction. So on June 4th sold to Burman of Bombay. Where it will be recorded? It will be recorded in a sales book. But in this problem we are preparing only purchase book now. So this on 4th June will not come in this purchase book. Next is purchased from Vijay of Vijayawada. Purchased from Vijay of Vijayawada. So 10 bushets, 8 rupees 90 each. This will be recorded in purchase book. Next on June 8th, bought from Bombay Furniture Mart Bandar. 10 chairs at 80 rupees for each. So it is a name. Purchased goods on credit or purchased asset on credit. In that purchase book, we recorded only purchased goods on credit. That goods will be reselling into that customer. But these fixed assets, we have to use for running purpose. Okay. So bought from furniture. So purchased assets on credit will not be recorded in purchase book. So that assets where we have to record it will be recorded in journal proper. So this is also not come in the purchase book. Okay, now see the solution. Purchase book of Mrs. Fancy Dress Mart. Date, particulars, invoice number, LF number, amount. Date, particulars, invoice, LF number, amount. Which date? June 2nd. So purchase it from Gupta of Guntur. In that particulars, we write only the name of that person. Okay, Gupta of Guntur. How many 100 t-shirts at the rate rupees how much? 80 per shirt. Total is how much? 100 into 80 is 8,000. So that will write under this amount column. So invoice number is 1. Lay that ledger folio column. Okay. 100 t-shirts. One t-shirt is how much is price? 80 rupees per shirt now. 100 into 80, that is an 8,000 first invoice amount. Next is on 4th June, not come, that will become in a sales book. Next is June 6th. Purchased from Vijay of Vijayawada. Vijay of Vijayawada. 10 bushets at the rate rupees. How much? At 90. 90 each. Total is how much? At the rate is an into. Okay, 10 shirts into 90 is how much? 900. So invoice number 2. 900. Okay, do the total. 800 plus 900 is 8900 is a total. See the next problem. Enter the following transactions in the books of Premdas. Also shows the purchase account. Also shows the purchase account. In 2030, January 1st, which book we are preparing? Purchase book. So purchase book means what? What are the transactions relating to the purchased goods on credit that will be recorded in the purchase book, otherwise not. On Jan 1st, purchased from Mohan on credit 4 reams of white paper at rupees 65 per ream. This will be recorded in purchase book. Next is Jan 2nd, purchased from Gopi 4 dozen ink bottles at 48 per dozen. This will be come in purchase book. Next is and Jan 3rd, purchased from purchased from Rao 2 dozens writing pads at rupees 96 per dozen. Next is and 4th Jan, return 2 defective parts to Rao. So this will come in purchase book? No, returns na. Returns means what? Purchase returns. So here purchased from Ram. Here we return to the Rao. So that is what a purchase return. So this is not come in purchase book. So this will appear in purchase return book. Okay, this will not come into this purchase book. Next is purchased from Kishore 3 dozens purchased from Kishore 3 dozens ball pens at rupees 15 per dozen. So this will also come in purchase book. Okay, only one item is not come under this purchase book, that will be recorded in purchase returns book. But in this problem only we are preparing purchase book. Okay, now see the solution. Okay, so purchase book of Premdas. date, particulars, invoice, LF, amount. Date, particulars, invoice, LF, amount. Okay, leave that invoice column, so leave that LF column. Under this invoice column we write just numbers 1 2 3 4. Okay, on 2013 Jan 1st, purchase from Mohan. Here we write a supplier's name now. So that is an a Mohan. How many? 4 reams of white paper. 8 rupees. How much? Rupees 65 per ream. Total is how much? 4 into 65 is 260. So this amount will write under the amount column. Under that invoice number is 1. Next is and Jan 2nd, purchase it from Gopi. They purchase from Gopi 4 dozens ink bottles at the rate of how much per each dozen is rupees 48. Total is 4 into 48 is 192. Invoice number is 2. Next on January 3rd, purchase it from Rao 2 dozens writing pads. Writing pads at the rate how much? Rupees 96 per dozen. So 2 into 96 is how much? 192. Next is and Jan 5th, purchase it from Kishore 3 dozens ball pens at the rate rupees is how much? 15 rupees per dozen. Total is 45. Okay. Total is 260 plus 192 plus 192 plus 45 is total is 689 is the total of purchase book. Next also we also shows enter the following transactions in the book of Premdas and also shows purchase account. Accounting is in the form of an a T shape. Left hand side is known as an a debit and right hand side is known as an a credit. Debit, credit, date, particulars, LF, amount, date, particulars, LF, amount. Generally, purchase book shows which balance? Debit balance. So for that, what is the entry for that purchase book? So purchases account data to any supplier's account now. So here is a total of this purchase book, on which date? Jan. After fifth date is completed. The next is Jan 6th to sundries as per purchase book. Total is how much? 689. Okay, so close on which? On 31st Jan. By balance carried down. How much is 689? Now close this account. 689, 689. Okay, so this month closing balance is a next month opening balance. Next month is 1st February. To balance brought down is 689. In this way you have to show the different accounts also, like sales account, sales returns account, purchase account. This is our today's class.